this training is brought to you by HowStops. We are a coaching and consulting company that exists to bring personal transformation to you, as an individual, to businesses and communities through trainings and coaching and consulting. At HowStops, we strongly believe that, it's possible for individuals to fully utilize their potential. It's possible for people to live fulfilled lives. It's possible for people to, harness their full capacity, right? At HowStops, we know that you can be much more than you are, and we exist to help you walk through the processes of maximizing your potential, whether it's in your personal life or in your business, right? So moving on real quick, just a little background about myself so that you can know that I'm not just trying to I'm not just trying to buy time. Okay, I actually am doing this intentionally. So my name is Ifemade Kunat, and I currently serve as the Chief Responsibility Officer at HowStops Coaching and Consulting Limited. I have experience across multiple sectors, namely banking, education, administration, and so on and so forth. And I'm passionate about helping people maximize their potential, be it in their personal lives, in their finances, or in their business. And over time, I've been able to develop training curriculums for institutions and also for HowStops Coaching and Consulting Limited, where I currently serve as the Chief Responsibility Officer. And that's just a very, very little snapshot about me. What this session is not going to do for you. This session is not going to teach you how to get rich quick. Okay? This session is not going to teach you how to sleep tonight and wake up tomorrow with $1 million in your account or ₦1 million in your account. No, that is not what this session is about. What is this session about? And stating that means that if you're here with the mindset of, I want to come and learn what I can learn that took me 12 years to arrive at this point where I am, right? Then this session is not for you. You can as well exit. But I can tell you 3 things that this session is going to do for you. 1, you're going to experience a mind shift. You're going to experience a mind shift as far as what financial intelligence, wealth creation is about. Number 2, you are going to be positioned for your increase, right? Because I believe strongly, and I coach people to believe, I teach people to believe, my team believes that we live in an is already, but because of the posture of our minds, because of the way our minds have been wired over time, we don't even see the abundance. And if you don't see it, you can't tap into it. So the first thing this session will do for you is to give you a mind shift, to change your mind on how you think about money, how you think about wealth creation, and how you think about your finances, right? And the second thing that this session will do for you is position you for the increase that is coming to you. And number 3, this session is supposed to help you develop your own financial roadmap. Now, this session is designed to help you shift your mind, because wherever you are now financially, right, your current mindset has brought you there. If you're going to achieve a higher level of financial increase, you must up your thinking. Okay, let me use that English. You must move from one level of thinking to a higher level of thinking, right? Because the things you did, the energy you exerted, the extent you went to that brought you to where you are, is not going to be enough to take you farther than where you are. Then you would also be able to develop your own personal finance roadmap. All right, so let's get on. So what is financial intelligence? I know a lot of that word has been used in a lot of places. So what does financial intelligence mean to you? What does financial intelligence mean to you? I want to hear from you, chat box. Can you share with me, when you hear financial intelligence, when you hear the word financial intelligence, what does it mean to you? I want you to type in the chat box. Talk to me. Financial intelligence is not a new word. It's a word that has been used over and over and over again. But what does it mean to you? Does it have any meaning to you? I want to hear from you in the chat box. A wise management of your funds. Fantastic. Thank you, Linda. Thank you very much. Who else wants to share? Who else wants to share tonight? Knowing how to manage your finances wisely. Fantastic. So financial intelligence is the knowledge, having the requisite knowledge, right, that will help you make sound financial decisions to arrive at your financial goals. I'm going to take that definition again. Intelligence is having the knowledge that is necessary to make sound financial decisions in order for you to reach your financial goals, right? That is what it means to be intelligent financially. And you're right, the ability to make wise financial decisions. But what brings you to the point where you're able to make financial decisions? It is knowledge. It is what you know that determines the quality of your decisions. It is what you know that determines the kind of decisions that you're able or unable to make, right, as far as finances are concerned. Now, a lot of people don't go for knowledge. A lot of people don't think that it is important to develop themselves so that they can make more effective financial decisions. And that is why a lot of times we find ourselves working and earning and spending, but at the end of 2, 5, 10 years, you can't really say this is what you have to show for it, because we've been taught to do exactly that, right? The traditional education system teaches us to go to school, get great grades, get a great job, earn money, and then just continue with life. But increasingly, people are beginning to realize that that is not enough. And financial literacy is not something that is intentionally taught in traditional settings. Professionals working to earn to spend, right? Because their minds have not been trained to be intelligent when it comes to finances, right? And people also have this negative mindset of, as long as I have a job that is paying me a salary, or as long as my business is doing well, then money will keep coming. So people are not mindful of saving, of investing, of intentionally having a plan, right, to grow their finances. And this becomes the pitfall of many people, right? And that is one of the reasons why we are doing this at HouseTalk. We want people to become more aware of how money works, right? What to do with your money, how to intentionally develop a financial plan for yourself. Now, I've heard many stories and I've been privileged to help people walk through their personal finances. And I realized that it's never about how much you're earning monthly or weekly or whatever the frequency of your income is. It's never about that. I've mentored people that earn 500,000 naira monthly, but they have no assets, they have no valuable investments to show, and they are usually almost always broke. Why is that? Financial intelligence is lacking. A lot of people are financially illiterate, even though they are graduates. We are graduates, we went to school, but we don't know how to how to handle money and make it work for us. Now, I must say something. Your goal should not be working to work for money. Your goal should be arriving at the place where money begins to work for you and produce for you. And in order to take you a step closer to that place where you are financially free, and I'm going to define what financial freedom is. In order to take you a step closer to the place where you're financially free, there are certain principles that you must practice, right? There are certain principles that you must practice, and I'm going to share those principles with us in this session. So what does it mean to be financially free? To be financially free means that you have what you need, right, to cover for your lifestyle. You have the kind of finances you need. You have the kind of system that you need to cover for your lifestyle, whether you are working actively or not. right? Let me take that again. You can say you've arrived at financial freedom when you are comfortable, you are living the kind of lifestyle that you desire, right? You have enough money to cover for your lifestyle, whether you are engaged in active work or not. So at that point, working becomes a choice for you. You're no longer working because you have to earn or you have to eat. You are working because you want to work, right? And your lifestyle is not being affected, right? And that is the point where a person can say they are financially free. Now, according to statistics, only 5% of the population of Nigeria, using just Nigeria as statistics, only 5% of Nigeria's population will be financially free by the age of 50. Now, that is a staggering statistic, and you want to be part of that 5%. I don't know what your own retirement age is going to be, or the age where you want to be financially free is going to be. Now, why is it important to aim for financial freedom? Because a lot of people work jobs that they do not like. A lot of people run businesses that are stressing them out, not because they want to, but because they have to earn, right? But you deserve to live a life where even your work is fulfilling for you. You deserve to live a life where you can afford to do what you want to do with your life and not what you have to do to get by, right? So I need many more people to move from that place of working to earn, to put food on the table, or to maintain a particular lifestyle, to the point where your work, even if you're working, is from a place of joy and fulfillment and purpose. But a lot of people cannot make that move because they are not financially independent, they're not financially free. So that is why it is so important for us to learn how to get financially intelligent. Now, a lot of 70% of people that are poor are not poor because they don't have a source of income, right? 70% of poor people, and when I say poor people, I don't just mean that you're wearing rags, right? If you're still earning, if you still have a poor mentality, a poor person's mindset, then you're poor. If you're still earning, right, just for the purpose of eating, you're still at that base point. You are still at that survival level. And 70% of people are stuck in that place because they are not financially intelligent, right? Not because of how much they are earning, but because they are not financially intelligent. So I want to take us on a journey, and I hope that you will come on this journey with me, right? I want to show you certain very simple principles that practicing over time will help you see significant changes in your finances. Practicing these very simple principles over time will help you see significant moves, significant changes in your finances, right? And before I get into sharing those principles, I'm going to define 4 terms. The first term that I'm going to define is income. Now, what is income? Income is any money flowing into your account, right? Any money flowing from outside to you is your income. Now, there are 2 types of income. There is active income and there is passive income. Now, active income is income that you get from your active work, your job, your business, because you are actively involved. Any money you earn from it is called active income. While passive income is money that you earn from other sources apart from active work. So, for instance, if you invest in buying shares of a company and they pay you dividend, right? That dividend is income for you, but it's passive income because you did not work with the company to be able to earn that money, right? Your money worked for you and then you earned dividend. Another example of passive income is rent. You have an apartment and then you get people to occupy the apartment and they pay you rent. That rent is passive income for you, right? Because you already set up the system for that money to be able to come to you passively. Now, the goal is to be able to use your active income wisely in such a way that it can develop into streams of passive income for you, right? To use your active income wisely, that is your salary from your job or your profit from your business, should not just be for spending. And I'm going to explain certain things that you can do to begin to intentionally diversify your active income into streams of passive income for you. And the recommended number of streams of passive income is 4 streams, right? 1 stream of income is too close to no stream of income, because if anything happens to that stream of income, it means that you're back to square zero. So your target should be to have at least 4 streams of income, right? If you have more than 1 stream of income here, I want you to type 1 in the chat box. If you have more than 1 stream of income, type 1 for me in the chat box. If you have more than 1 stream of income currently, type 1 for me in the chat box. If you have 1 stream of income, type 0. If you have more than 1, type 1. Okay, I see Oduala says, yes, I have more than 1. Harold says, I have more than 1. Judith says, I have more than 1. Lois says, oh, I'm talking to amazing people here tonight. If you have just 1 stream of income, type 0. If you have just 1 stream of income, type 0. So 1 stream of income is too close to no stream of income. So your goal, one of your goals should be diversifying your active income into at least 4 streams of passive income. I see people typing 0. It's okay. That's one of the reasons why we are here, okay? Now, that's for income, right? Income is any money coming into your account, right? Flowing in. Expenses are whatever, any amount of money going out of your account, right? To sort out bills and other spendings. They are expenses. Is leaving your account. Is leaving you. Money that is leaving you is an expense. Money that is coming to you is an income. Now, assets are any item that causes income to come into your account is an asset. Any item that causes income to flow into your account is an asset. Any item that causes you to spend, that causes money to leave your account, is a liability. Should I take that again? Any item, I know that this is a very, very simple way of defining assets and liabilities, right? When you get into accounting and all of that, it's more complex. But for the purpose of personal finance, just know that any item that causes income to come into your account is an asset. Any item that causes money to leave your account is a liability. So for instance, I have a laptop here. If I use my laptop for work, okay, and I earn from the work I do with my laptop, that laptop is an asset to me. But if I use this laptop simply for the purpose of entertainment, watching Netflix, listening to music, watching movies, and I'm not engaging in any activity with this laptop that is bringing me income, this laptop becomes a liability. So that's how I want you to view assets and liabilities, right? So with this definition, can you give me some examples of assets that you have in your life that you have not considered before to be assets? Let me give you another example. If you have a car, right, and you use the car, for taxi hailing services like Uber or Bolt, right, or InDriver, that car to you is an asset because you're using it to generate income. But if that car is simply for shuttling from one place to another, it's not so much of an asset. And somebody can argue that definition with me, but remember that I said, for the purpose of personal finance, take that definition as it is. So I want us to share what other kind of assets do you, what kind of assets what other examples of assets can you identify? Samuel says, what if you use the car to go to work? Now, let me ask you a question, Samuel. You are fueling that car, you're servicing that car, you're taking care of that car, it's taking money from you one way or the other, right? Now, does it mean you should not have a car? No. There are liabilities that are necessary. They are necessary. There are liabilities that, life is a balance of assets and liabilities, but you should be more asset driven. There are things that you have in your life, items you have in your life that you're not using to generate any income for yourself. But if you begin to look at it from this perspective, you can begin to ask yourself, how can this thing be used to generate income for me, instead of just lying around, right? So life is a balance of assets and liabilities. Of course, if you need to go to work, you need to commute from one place to another, having a car is not a bad idea, right? But then that car can also be translated into an item that will generate income for you, right? So have this at the back of your mind. Now, I said I was going to share a few principles that will help us take more control of our finances, right? How will you feel if you woke up every morning knowing that you are actually in control of your money? And I'm sure that you will feel so good, right? You'll feel so good and you'll be able to project. Now, I'm going to share some principles with you tonight, and I want you to take serious note of these principles. And one thing I usually tell people when I coach them is, it doesn't matter what training you attend, it doesn't matter what book you read, it doesn't matter who coaches you. If you don't practice what you are learning, then you are as good as the person that doesn't know at all. So knowledge is not the ultimate goal. Applied knowledge is what brings results. So it doesn't matter that you are in this training tonight. If you don't go back, right, to say, how can I begin to implement this thing that I learned tonight? How can I begin to put to practice the things that were shared tonight? If you don't do that for yourself, then it will have been a waste of time. And I don't want you to waste your time. So I want you to make up your mind that the things that we're going to be discussing tonight, you would go back and look at areas where you need to make adjustments and begin to practice. So the first thing I'm going to talk about is budgeting, right? The first thing I'm going to talk about is budgeting. Now, the truth is, a lot of us know how much, you probably know how much is coming to you every month, maybe salary or your business, but many people don't know how much goes out. Many people don't know how much leaves their account. Well, even those that know how much leaves their account don't have a control over their expenses. And if you don't have a hold on how much is coming in and how much is going out, you are never going to be in control of your finances. Money will keep coming in and going out, and you will never be in control of your finances. And if you don't take control of your finances, you can't set goals, you can't hit milestones, right? So the first thing is, you need to know how much you are earning as income. If you are a business owner, how much comes into your account from your business, right? On a monthly basis or a weekly basis, how much do you pay yourself from your business, right? On a monthly basis or on a weekly basis or whatever basis. If you're a salary earner, how much comes to you? If you have other jobs that you do by the side, what is your total income like in a month? You must know, right? The second thing is, you must know your total expenses. What does it cost you to run your life in a month? You must know. You must know, because this is going to help you to be able to sit down and create a budget. I'm very happy that this is the ending of October, so you can practice this for November. What is coming into my account? How much is going out? How much do I spend on data? How much do I spend on electricity, fuel or transportation, food? What are the other things I spend on? And many of us don't even know what we spend on. We just spend. We just spend, and it's not a healthy habit, right? Wealthy people have a hold on their expenses. They know what money is going into, right? So budgeting is very, very important. You need to know how much is coming in every month. What am I spending on every month? How much is going out of my account every month? So I want to challenge you to do something. After this training, get your bank statement, right? Download your bank statement for the past 1 year. And I want you to do two things. I want you to look at, for the past 1 year, what the total amount that has entered into your account. Many of us will be surprised at the figure. It will show you that you don't even know how much money you have, or that has come through you in the first place. So after this training, I want you to go download your bank statement and look at the total amount of money that has flown into your bank statement. That's number one. Number two, I want you to take note of the expenses on your bank statement. What am I spending on? What is taking my money? You realize that there might be some excesses. There might be some unnecessary expenses that you spontaneously made, right? That you can cut back on, right? This is going to help you to understand your spending habits. This is going to help you to understand where your money is going to the most and where you need to cut back on the most, right? I've done this exercise for a number of people, and some people realize that I spend a lot on eating out. I just go out, I buy Coke, Gala. By the time you calculate all the Coke and all the Gala and all the Chicken Republic that you have eaten in a month, if you had saved that money or you have invested that money, it would probably have yielded something for you, right? You know, this generation, we are the I cannot come and kill myself generation, right? So when we are tired, some people, when they're tired, they just eat. Some people, when they're tired, they just go to the cinema. Some people, when they're tired, we have many ways of coping with stress that has to do with spending money, right? But what you don't know is that the money that, if you're not intentional about saving and investing today, now, when you get to your future, you'll be experiencing what you're experiencing today times 10 in your future. So it is important for us to be intentional about the now so that we can secure tomorrow, right? Another person says to me, "What? Nobody knows tomorrow." I'm like, that's no justification for being careless about tomorrow, right? It's better for us to plan for tomorrow and not arrive there than not plan for tomorrow and be confused when we get there, right? So doing this exercise is also going to help you to recognize what your spending patterns are, and it will help you to come up with a budget for each and every month. It will also help you to be able to know if you need to increase your earnings or cut down on certain expenses, or do both, right? Because awareness is the beginning of progress. If you don't know where you stand financially, you can't make progress, right? If you don't know where you stand financially, you cannot make progress. So who is going to do that? If you're going to do this assignment, I want you to type yes in the chat box. If you're going to download your bank statement, take note of the total amount of money that has come into your account in the past 1 year, the total amount of money that has left your account in the past 1 year, and then note the expenses that, as you know, that the things you've spent on most in the past 1 year. Say yes, I love it. I love it. Thank you so much. I'm seeing people that are going to take action after this training. Yes. Please do it. It's for your own benefit. So it's going to bring you to a place of awareness. First of all, you will know that you're not really poor after all, because I assure you that you'll be shocked at the amount of money that has come through your account in the past 1 year. Number two, what this exercise will do for you is to help you to see your own spending patterns, help you to note what you need to cut back on, and help you to decide whether you really need to increase your income fast. Think of ways to earn more income fast, right? Now, what is a budget? A budget is simply a statement of expected income and expected expenses. Now, money is currency. It flows. Whether you plan it or not, you will spend it. But not planning it means that it will go in any direction that it sees. Planning it means that you can channel your money in the way you want it to go, right? In the way you want it to go. So it's not that it's just moving. People say things like, I don't know where my money is going. It's because there's no intentionality. But the moment you begin to draw up a budget for yourself, you decide where your money goes. So a budget is just a statement of expected income and expected expenses. So you need to sit down by the end of this month of October and ask yourself, how much am I expecting for November? That's your income. Then you ask yourself, what are the things that I am expecting to spend on in the month of November? How much am I going to spend on data? How much am I going to spend on food? How much am I going to spend on transportation? How much am I going to spend on, whatever else that is a need? Now, you must also be able to distinguish between what is a need and what is a want. And you don't attend to your wants until you've attended to your needs, right? Your basic needs include feeding, clothing, transportation, shelter, right? And then those are basic needs. Then every other thing comes under the category of wants, right? Now, knowing how much is coming into your account as income will help you to reasonably decide what is within your limits. A lot of people want to live lifestyles that they have not yet arrived at the capacity to live. But once you are able to say, okay, I'm expecting 250,000 for the month of November, you can now decide how much is reasonable to spend on food. You can't earn 250,000 in 1 month and be spending 100K on food. It's foolishness. It doesn't matter if your friends are all bougie and eating out every weekend. You can't compare yourself with anybody else in this journey. You must be real with yourself, be honest with yourself, and do what you can afford only, right? And there are some people who spend more than they earn because they've taken debts. Now, you need to understand that any debt that is not going into something that will generate income for you is a bad debt. So you don't take debt for something like a party or a family function or or an outing, things like that, right? The only time when I can even say debt is good is if you need it to expand a business that you've already started, not even to start a new business. Because some people are falling into the trap of taking loans from these online loan people, and then you pay exorbitant interest rates, and before you know it, you can't even pay off the debt, right? So budgeting is very, very important. Now, the second principle I want to share with you is the bucket system principle. The bucket system principle. Now, what does this mean? It means intentionally splitting your income into categories, right? It means intentionally splitting your income into categories. What do I mean by that? So you earn an amount of money from your business or from your job, right? And once the money is coming into your account, you are splitting it into different categories. Now, I'm going to give you 4 categories that are so important if you're going to build a financially sound future for yourself. The first category is an emergency funds account. It's important for you to know that things happen in life that are not planned. And so many people fall into financial crisis because they did not have any system that prepared them for that emergency. And that's why it's called emergency. You don't plan for emergencies, but you can give yourself soft landing in case of an emergency if you had an emergency fund account, right? And typically, you should have at least 6 months of your living expenses saved up in an emergency fund account. And your emergency fund account should be a cash account or a near cash account. You don't invest in real estate and say that's your emergency fund. No, because the day you will need urgent cash, you can't quickly liquidate real estate investment. But you can do like you can put it in a savings account, or you can put it in maybe a mutual funds account where it's growing with little interest for you on a monthly basis. Why is it important to have an emergency funds account? I've already shared with you. Things happen. Your car can break down. Somebody, a family member can have a health emergency. Something can happen, a pandemic, something unplanned can happen. In order for you to give yourself soft landing, people lose their jobs and they just go into a frenzy because they don't know what to do, because they've been living paycheck to paycheck. Now, I'm going to give you practical examples. Let's assume that you earn 200,000 naira in a month from your job, right? Now, 10%, if you're a Christian, 10% goes to your tithe, right? That's already down to 180,000. Now, typically 10% should go into your emergency fund every month until you have at least 6 months of your living expenses. Now, if your living expenses comes to around 100,000 naira per month, it means that your goal for your emergency fund should be 600,000 naira. And these things take discipline, guys. Don't let anybody deceive you. Out there, you see different things saying how to earn 1 million naira in 2 seconds. Even if you earn 1 million naira in 2 seconds and you don't know what to do with it, you're going to squander it, right? Because there's something called your money stealing. There's something called money blocks. And by the way, there's a course we are launching. It's a personal finance mastery course where we're going to address money mindset, your money programming. We're going to help you learn how to install more supportive money programs in your mind that would help you on your wealth creation journey, right? We're going to talk about money ceilings and money blocks, how to identify the beliefs that have held you at a particular level of income this far, and how if you don't break those limiting beliefs, even if you earn more money, it's coming down back to that level. If you have a money ceiling of 100,000, even if you earn 1 million, somehow you will find a way to spend it until it comes down to 100,000. It's a money ceiling that must be shifted. And in the personal finance mastery course, we're going to be teaching on that. So back to what I was saying, the bucket system. Your emergency fund account should hold nothing less than 6 months of your living expenses. So I said if you're earning 200,000 naira per month, 10% should typically go into your emergency fund. The second bucket is your investment fund. And guys, saving for the sake of saving does not help anybody become rich. And I know that you know that. Just keeping money in a bank account with no plans to invest it has never made anybody rich. Savings doesn't make you rich. Saving is supposed to help you have a bulk sum that you can invest. Investment is what makes people wealthy, because compounding sets in at some point, right? And you can literally, become wealthy by consistently investing a particular amount of money over a period of time, right? So the second bucket is your investment funds. Now, your investment funds, right, is what you should focus on. Now, this money that you're putting aside for investment is not for Asoebi. It's not for dirty December. It's not even for buying a car. If you want to buy a car, you should create another category of savings for that. Your investment fund should be strictly for the purpose of investing in viable investment opportunities, right? And one other thing we're going to teach in the personal finance mastery course is how to spot viable investment opportunities. We're going to be sharing some things you can do, places you can put your money in that will grow consistently over a period of time. We're going to be sharing all of that in the personal finance mastery course, which is launching on the 5th of November 2022, and is a 6 weeks course, right? I'm going to give you more details at the end of this training. So your investment fund is a savings, is money that you're putting aside from your income monthly to invest in a viable investment opportunity, right? You are not supposed to take out of that money for any reason, okay? You're not supposed to take out of that money for any reason that is not investment. Now, what do wealthy people do? Wealthy people don't spend their interest on investment, their return on investment. They reinvest part of their ROI. Let me explain what I mean. So this guy that earns 200,000 naira per month, he has decided that he's going to save 20% of his income every month, right? So 10% goes into tithe, 10% has gone into his emergency fund, 20% is going monthly into his investment fund. So every month, once they pay him his salary of 200k, 20k goes into a separate account for the purpose of investment. Right now, for the purpose of investment, so every month he's putting aside 20k out of his 200k. Now, after 5 months, he has already saved 100k, 100,000 naira. I want you to see the power of compounding, guys. Now, where you have principal amounts, don't worry about the currency. Just let's assume that we're using naira. where you have principal amount, can you please put 20,000 naira? Remember that this guy we're using as an example is saving 20,000 per month, right? Is investing 20,000 per month. Now, I want you to put where you have interest rates. Where you have interest rates, I want you to put 15% and change the daily time frame, change it to yearly. Okay, change it to yearly. Are we together? Then change the years to 10 years. Change the years to 10 years. Okay, change the additional deposits, put 20,000 because you know it's going to be adding 20,000 every month. So put 20,000 under additional deposits. Then click on calculate. Did you get my explanation? Did you get my explanation? Does anybody need clarification? Did everybody get my explanation? So what figure do you have after clicking calculate? Type the figure you have. Type the figure you have when you click on calculate. What does this mean? It means that if you faithfully saved 20,000 naira, if you faithfully invest 20,000 naira monthly for 10 years in an investment opportunity that gives you 15% per annum, at the end of 10 years, you will have 5.6 million naira. Now, you might be saying 5.6 million naira in 10 years is small, but how many people on this call have 5.6 million naira somewhere, whether in savings or in investments? How many of us here have 5.6 million naira saved or invested somewhere? Do you understand what I'm talking about? So I'm saying even with the littlest amount of savings, later after this call, you can try it with 10,000 naira. How much will 10,000 naira give me monthly? If I invest it in an investment vehicle that will give me 15% per annum, if I do 10,000 naira per month for 10 years, how much will it give me? Just play with the figures and see the power of compounding. You can increase it to 50k monthly, you can reduce it to 10k monthly. Just look at what the little amount, the 5k shawarma, the 5k credit monthly, the 5k flex money, saved and invested at just 15% per annum, what it is going to give you in 10 years time. You will not believe it. And the truth is that if you did not save that money, you will have spent it on something. Do you understand? So in your investment fund is very important, guys. And like I said, this money is money you're keeping for investment purposes, not for spending. Now, the return on your investment should be reinvested to increase your capital and shorten the time it will take you to achieve your goal. Right? So let me repeat that again. When you invest money and you get return, you're not supposed to just take that return and spend it and be happy that I've made money. No, you should reinvest a percentage of that return back to your original capital so that your capital will increase and your subsequent return on investment will also increase. There's a calculation for that and it's mind-blowing. But because we look at the 1,000, the 2,000, the 5,000 as nothing, we spend it instead of setting it aside and watching it compound. Do we understand? So I've talked about your emergency fund. I've talked about your investment fund. And guys, if you enroll for the personal finance mastery course, we're going to be teaching you personally. We will get into the real matter, right? How much do you earn? How much do you spend? Show me your budget. Okay, how much can you afford to invest? What are the options that are available to you to invest in right now? to start your journey. And for 6 weeks, we're going to be getting into the deep as far as your personal finance is concerned, because you must see results after 6 weeks. And after 6 weeks, something must have shifted in your mind, something must have been deposited in you that will take you on your journey, right beyond 2022. That is for those who enroll in the personal finance mastery course. Now, the third bucket I always talk about is your spending bucket, right? Now, this guy that earns 200,000 per month, he has put aside 10% for his tithe, 10% for emergency fund, 20% for his investment fund, and then that's 40%. So 50% is for spending, right? 50% is for spending. And when I say spending, what do I mean? It's for his lifestyle, for food feeding, transportation, rent, and so on and so forth. So on this 50% is what you draw up your budget on, because you already know 10% is for tithe, 10% is for emergency, and these percentages are they are subjective to depending on what you want. But I usually recommend 10% for emergency fund and 20% for your investment fund. That leaves you with 60% for your lifestyle, because you don't want to save so much that you are now suffering. Rather, and also you don't want to spend so much that you are not saving. So you see that there's always a balance to this thing. And it doesn't matter, guys, how much you are earning at the moment. Be accountable for what you have, more will come. If you are not accountable for what you have, you will remain there. Do you understand? So this guy is left with 60% to spend, to budget on, right? Then he can now sit down and say, okay, this remaining 60%, and 60% of 200,000, 60% of 200,000 is what? 120,000. So you can say, okay, my rent, how much is my rent, but how much am I going to pay for my next rent, right? Divide that amount by 12 and set aside 1/12 every month, so that by the end of the 12 months, you're not running helter-skelter looking for rent. You already have your rent saved up somewhere. Do you see? So life can actually be easy for you if you choose to take some of these very, very seemingly simple steps, right, with your finances. So the guy sit down and then budget the 120,000. Budgeting is something we will delve deeply into in the personal finance mastery course. You even have a spreadsheet already made for you that will help you plan out your finances, and you're going to be held accountable for it, right? So those are the major buckets that you can split your income into. Now, when you've done your budget, you can now ask yourself, for me to be able to step up my lifestyle, for me to step up my savings, how can I increase my income? That's after you've looked at unnecessary expenses you need to cut down on. But there's so far down you can go, right? For some of us, we are on the basic, we are on the basic expense level. So the question you need to ask yourself if you're at that level is, what can I do to earn more? Right? And for you to be able to find out what you can do to earn more, you need to begin to ask yourself, what skill sets do I have? If you already have a job, what kind of extra activity can I engage in by the side that can bring in income for me? And one of the things we're going to be delving into as bonus in the personal finance mastery course, right? Okay, Rebecca, I'm going to answer your question. If you have questions, type it for me in the chat box. I will answer your question. Right, so what was I saying now? Okay, so I said as a bonus in the personal finance mastery course, one of the things we're going to be talking about is how you can earn extra income. We're going to be having conversations. What skills do you have? What kind of activities can you engage in that will bring in extra income for you? I'm going to be sharing at least 20 opportunities, income earning opportunities that you can do by the side if you have a day job, right? And if you have a business, what can you do to make more sales in your business? We're going to be talking about all of this in the personal finance mastery course, right? Now, another thing that you need to understand is accountability is so important. Who are the kind of people you surround yourself with? Do you guys talk about these things? Do you talk about money management? Does anybody in your circle care about personal finance literacy? Because if you're surrounded by people who don't give a hoot, then you're going to be, if you're going downhill, there's nobody to caution you, nobody to put you in order. And I find that a lot in this generation. We don't want to be accountable. We don't want people to ask us, what are you doing with your money? Where are you investing in now? So what are you doing now? And if you check the life of great people who have sustained wealth, they are accountable. They have their own inner circles. So the Personal Finance Mastery course is an opportunity for you to have an inner circle, right, of people that will hold you on this journey. Okay, so let me take questions. I'm checking the chat box for questions. Rebecca says, how to handle the extended relations demand. Now, I have to say this. In Africa, there is something that we suffer from, right? And it is that mentality of you are responsible for everybody else. And I know family ties are strong, and all of that. But listen, you will not be doing your relatives any favor if you are not growing financially. If their demands are weighing you down so much that you can't grow financially, you are not even going to be able to help them in the real sense of it. You must draw boundary lines, guys. We must draw boundary lines. If you earn 500,000, 400,000, 100,000 monthly, and you've budgeted that this amount is as far as I can go in giving to extended family. Once you've hit that mark, you tell them it's no longer available. You must if you don't draw the boundary, you'll be hurting yourself at the expense of people that probably won't show up for you when you need their help. And I'm not sorry about it. Is it good to give? Yes, but you include the percentage you want to give. And once you've given it, let them know that this is how far you can help. And really, if you've positioned yourself as the savior of your family, they will have those expectations. They will have, how about ask them, what's your plan to earn? What are you doing? How are you planning to make money? Because I'm not going to be your benefit sister or your benefit brother. We must break out of that mentality. So that is the way to go. If you giving to your family is not a bad thing, don't get me wrong. But I'm saying budgets. 10% tithe, 10% emergency, 20% investment. Out of the remaining 60%, how much are you going to earmark for your extended relatives or your extended whatever? And stick to it. Stick to it. That way they even know how far they can expect from you. And if you're listen, you can't be sentimental. Sentiment has not helped anybody to achieve much in life. Right? Sentiment has not helped anybody to achieve much in life. Okay. So I'm going to take these questions one after the other. Not spending so much that you are not saving, and not saving so much. Life is unpredictable. Okay, this person is just accentuating what I said. Somebody is saying, what's your take on black tax with a little full sense of entitlement from your folks? Is what I just finished talking about, right? Is what especially folks that are out of the country, and your people back at home feel like you're working for them. You're not working for them. Okay, you're not working for them. Should you give? You should. If giving is not a bad thing, but I'm saying plan your giving and let people know how far they can expect from you. Anything beyond that, we have to all go to God to ask. Okay, we all have to go to God to ask. So it even helps them to know that, okay, if Ifemade can only give 10,000 naira per month. Okay, so everybody knows, right? Everybody knows. And as Ifemade's income increases, percentage, that's why I say to people, work with percentages. So if 10% of your income is all you can afford to give, right? If you're earning 200,000 now, 10% is 20,000. If you increase to 400,000, 10% becomes 40,000. So the more I earn, the more I can give. That's why I really love to work with percentages. Okay, I'm looking at the questions. Somebody says, I believe to give relations a net to go catch their own fish and not giving them one fish every time. Fantastic. Except for emergency funds and investments, do you have any other savings differently? You can have savings specific for certain projects that you want to do. Right? You can have savings specific for projects you want to do. Now, in the Personal Finance Mastery course, I'm going to teach on how to order your investments such that it's overlapping each other, so that at different points in time, you have income coming in. So you don't just have long-term investments. You can structure your investment portfolio in such a way that you have a mix of long, medium, and short-term investment, so that income is coming in, overlapping at different points in time. But if you have specific projects that you want to do at a particular time, you can also create a savings plan for such specific projects. Okay, so somebody is saying, how far would you say is too far in breaking down expenses to have an investment? Let's say you break down your expenses to the extent that you're feeding once a day so that you can save up on cash. How far is too far? I think I already touched on that. I said, don't spend so much that you can't save, and don't save so much that you can't spend. The idea is finding your balance. I'm not of the category of people that believe that you have to suffer today in order for you to live tomorrow. I'm of the idea that you find the balance. You're not comparing yourself with anybody else. You know your income level. You know how much is coming into you. As much as you're also striving to earn more, looking for ways by which you can legitimately earn more income. But you have to ask yourself honest questions like, how much can I afford to conveniently save? I'm telling you, if it is 5,000 naira per month, start. Start. Okay? Because the problem is, most people look at it that 5,000, what is 5,000 naira? No, start. Right? Start with something. Let me use myself as an example. Years ago, my very first job was as a lecturer at Moshood Abiola Polytechnic. I don't know if any of you know that school. It's a state-owned polytechnic, right? And it was, it just showed me how far we have to go in Nigeria, because as an associate lecturer with a BSc and a chartered accountant with ICANN, I was earning a ridiculous salary. And with that level of salary, I was only able to save 5,000 naira per month. But guess what? I saved it. I did. Every month, I would take out of that ridiculous salary and save 5,000 naira. It's so ridiculous, I don't even want to tell you how much it was. But at the end of 12 months, by the time I was ready to walk away from that job and move on with my life, I had 60,000 naira, 60-something thousand, because I actually put it in mutual funds, so they gave me some interest of some sort. I had 60-something thousand naira bulk that I could put into something valuable. Do you see? So never deceive yourself that, what you have is so small that you can't save. Even if it's, do you get it? First of all, ingraining that mindset of setting something aside is what is critically important. Do you see? So I'm not saying don't eat because you want to save, and I'm not saying eat everything because you think what you have is too much to save, too little to save. So find your own sweet spots, find the balance, and stick with it. I hope I was able to answer that question accurately. All right, so somebody is saying, so on investment value we got from the calculation, what's the effect of inflation or deflation on it? This is why it is important to invest. Inflation is, when there is too much money in circulation than what you can actually get for your money, right? Now, if you put your money in a savings account, you're not getting any value on that money. But putting your money in an investment platform that is at least a little bit above the inflation percentage of whatever country you are in means that you're edging against inflation, means that you're at least preserving, right, the value of your money. Even if you're not getting any extra, you're at least preserving the value of your money. That's why I strongly advise people that, the end goal is not putting your money in a savings account. The end goal is finding an investment opportunity that allows you to edge against inflation. So if inflation in your country is 15%, you're looking for an investment opportunity that can give you at least 20% per annum, so that at the end of the day, you've covered, for the effect of inflation on your investment. Right. So somebody says, I'm so interested with the passive income, and that's my aim. With the salary, they are so much to keep and spend, ranging from rent, insurance, etc. That is why you should enroll in the Personal Finance Mastery course. I'm not going to be going into all the details of how to generate passive income, what to invest in, although off the top of my head right now, I'll just say, stocks. You want to begin to look at stocks, and these days technology has made it so good that you can actually do it from the comfort of your phone. There's something called exchange traded funds as well, right? People are breaking down real estate to basic levels where even middle income earners can begin to invest in real estate investment, and so on and so forth. But in the Personal Finance Mastery course, we are going to be making sure that we delve as deeply as possible into some of these investment opportunities, and how you can and how you can start your own journey no matter what you are currently earning. No matter what you're currently earning. So the third thing is get accountable. I said the first thing is budgeting. The second thing is use the bucket system. The third thing is get accountable, right, with your financial journey. And the fourth and last thing is invest in your own financial education. I find out that a lot of people, you want to become a doctor, you go to school. You want to become an architect, you go to school. You want to become a pilot, you go to school. But you want to be wealthy, you don't think that it is worth educating yourself about. No. If you look at Warren Buffett, the guy reads a lot, right? He started his investment journey at the age of 7. Get aware of what is happening in your economy. Open up your eyes to opportunities, right? Open up your eyes to the opportunities that exist in around you. Somebody says, while on campus, I spent almost all I had acquiring shares, only to realize years later that it's not really what it's in Nigeria. That's because you probably didn't get enough information. You probably invested in the wrong kind of shares. So the fact that somebody says invest in shares doesn't mean you should just go and buy shares of any company. You have to know the kind of companies to invest in. You have to know what to look out for when you're buying shares of companies, right? And that is why education is important. So, these are the 4 principles that I'm going to share with us tonight. And I really do hope that you've taken something out of tonight's training. I'm going to encourage each and every one of you to take advantage of the Personal Finance Mastery course. It's a 6 weeks course, intense 6 weeks course. We're going to be meeting once every week. We're going to be delving into the mindset of wealth creation. We're going to delve into budgeting. We're going to delve into how to generate extra income for yourself, how to invest, what the things to look out for as we enter into 2023, and all of that. It is absolutely not free fate. And that is why I talked about being willing to invest in your own financial education. The cost is 10,000 naira, right? And I tell people that if you don't see yourself as valuable enough to invest in yourself, I can't help you, right? A lot of people like free things. We like free things, and that's fantastic. But there is always a limit to how far something free can take you, right? So the link to the course has been posted in the chat box, and it will also be posted on the WhatsApp group. You can click on the link, read about the course, the benefits of the course, the things you're going to learn about the course, and then you would enroll for 10,000 naira only. It's a 6-week course. I'm going to be working with you personally. We're going to be having personal conversations, and it is definitely going to be a transformative time, in the course. And another thing you should know is, for those that register for the course, I become your partner literally for life. I run a wealth club, and you can ask every member of my wealth club. For those that have taken it seriously so far, they have testimonials to prove, that it's been worth their while. So I would not, try to cajole you or make you do anything. If you're interested, click the link, read about it. If you have questions, ask your questions. If you're not interested, it's absolutely fine. But I really hope that you will see this as a valuable opportunity to grow yourself and get yourself ready for 2023. A lot of things are going to be changing in the coming year. A lot of things are going to be shifting in global economies, not just in Nigeria, in global economies in the coming year. And you want to be positioned for the things that are coming so that you can identify the opportunities and take charge of your financial destiny. Well, thank you so very much for your time. I hope to see you in the Personal Finance Mastery course. It's never too late to start now. Yes, Faith. It is never too late to start now. The recording of today's session will also be shared so that you can always go back and listen to the session. Judy says, one thing stood out for me. I talk about emotional intelligence, academic intelligence, spiritual intelligence, but with finances, I've just been listening to my ancestors and wondering why things aren't working out the way I want to. Thanks a lot for this introduction. It was worthwhile. I love your feedback, Judy. Thank you so much. All right. Thank you all so much. I'm elated. My name is Femade Kunat, and this is going to be the end of the financial intelligence training session. And trust me, this is just like the tip of the iceberg.